Hello guys, welcome back again to my YouTube channel. So happy new year to each and every one of you. So this is my first video for this year, and I will be giving you a strategy from scratch to finish, like from the strategy itself to the execution of the trade. So I'll just be giving you a step-by-step guide to actually trade. So I urge you guys to stay tuned, watch this video to the very end, and please subscribe to this YouTube channel if you have not done that. All right, so it's just a simple price action strategy, nothing too complicated, nothing too complex. All right, so first and foremost, we need to identify the trend of the market. All right, that's the direction of the market. And then you mark out your structure, you identify the fair value gap, and then your supply or demand zone, and then you wait for your entries, and then you will just enter. So first, like I said, you identify the trend. So the trend could be to the upside, and then what you need to do is simply this, okay? So you identify the trend of the market to either be upside. You need structures like this, all right? So there is what liquidity, okay? There's structural liquidity here, and then boom to here, and then boom to the upside. Here you should always target here, and then you can always aim for higher. All right, so now let me just break this down. All right, here what we have here is what a break of what structure. Remember, this is the synthetic chart, okay? So here we have a break of structure. So we have a break of structure, BOS, all right? So we have our BOS, all right? The next thing, let me just use, yeah, we have a break of structure. So right here we have liquidity, okay? We have liquidity, which is right there. I'm gonna use dashed lines, the dotted lines, and all right, we have a structural liquidity, okay? So all right, break of structure, which is this, all right, the structural liquidity. And then what we have, the next thing we mark out for, it's our demand zone, okay? Here is actually a demand zone. So you wait for the market to come to here, then you buy it. And then in between here, there should be somewhat like here, there should be fair value gap. Fair value gap is mainly an imbalance, which indicates that there's an area there where the market is likely to come back and fill, okay? So because of that, it makes the probability of this trade higher. And then you can just take your trades from here and then to there, all right? So first, like I said, you identify the trend of the market, and then you identify the break of structure, then you mark out your supply and demand zone, okay? Supply and demand zone, and then the structural liquidity, which happens. So we're just going to go down to the main chart and just look at a few examples about this. First and foremost, let's go to the 4-hour time frame, okay? So we are using VIX 25 index for this example, okay? So VIX 25 index, all right? So right here, we can clearly see, I just wish I could actually like cut out this chart, okay? I just wish I can actually cut it out so that to make everything really pretty simple, okay? So you have the market being at this level, okay? So it has traded for a long while, went all the way up, and then came back right down, okay? So here we had a high, we had a low, so the market was supposed to continue in that particular manner, creating lower lows, creating lows, and just in that particular direction. So but what happened, what ends up happening is we had what a break of structure. We're going to use that structure there. Now let's use this structure here. Okay, let's use this structure. So we had our break of structure, which is this, okay? All right, we had a BOS. Okay, so we had our breakout structure, and then here we had our structure. We have our liquidity pool. Okay, we have our liquidity pool, whichever way you want to take it. Okay, so we have liquidity. All right, so right there we have liquidity. Okay, we have liquidity. All right, so we have our liquidity. All right, so what happens? Then the next thing we're going to do is mark out our supply and demand zone. So in this particular case, we are looking at a bullish scenario. Okay, so you just see our demand zone. All right, so see what happens. The market just came to this area, tapped into it. Okay, can put your stop loss just below here and then targets that high. Right, so you see, very pretty simple. You just continue with it in that particular manner, in that you continue with every high being taken out to mark out your demand zone. Okay, so the next thing you look out for, you look at here. All right, we have our BOS. All right, so do we have a fair value gap here? Okay, we had a fair value gap here, but the market has actually filled it before, so I just missed that part. So we have a fair value gap here. The market has actually traded into it before pushing to the upside. So you see, so that actually works very well. So right here we have another breakout structure. I'm just going to go ahead and just keep this a bit minimal, right? So we have another breakout structure. So since we have another breakout structure, here becomes our structural liquidity. All those are just liquidity. Okay, so but the market did not actually come back to our new demand zone. The market did not come back to our new demand zone. Okay, so you just continue like that. All right, with every high new being broken, you just mark out it out just like that. You just mark it out. So the market was supposed to come, tap into this, and then push to your target, but it did not happen. So we have another high being broken. Here becomes our new demand zone. Okay, here becomes our new demand zone. All right, so but still yet the market did not come to it. Let's just see, the market did not come to it. Yeah, so and then we have another high being broken. Okay, so that's just the amazing thing about this strategy. You don't chase after the market, you just wait for the market to continue to give you incidents, all right, and gives you opportunity. All right, so you don't chase the market. So the market was supposed to come here, then here you had your your liquidity pool. Okay, did not, but rather so we had liquidity. Okay, I see here. I see what happened. So right here we had liquidity. Okay, we had liquidity, so the market was supposed to come down here, but it didn't. What happened is we end up breaking another structure, and we had some liquidity area right here. So I'm just going to zoom in for you to clearly see that. It's just a very simple strategy, fam. So you see here, all those were just liquidity that needed to be taken out. Okay, so why I'm considering this is because we have a new break of structure, BOS, a new break of structure. Okay, I'm just gonna go ahead and just we have a new break of structure, BOS, and here becomes our liquidity pool. Shift. All right, so here becomes our liquidity pool. All right, so where becomes our new demand zone? This area right here. Right, so what happens? We could go to a smaller time frame and actually break this down a little bit. So you see there is actually a fair value gap right here. So you could see fair value gap is actually a 3 candle pattern. Okay, it signifies imbalance in the market. So that's our fair value gap right there. So I could just mark it out a bit. Let me use a different color. Okay, so So that's our fair value gap right there. So because of that imbalance, it has to be filled. So the market traded into our demand zone, and then it went all the way to our target. The stop loss just slightly below. So what happens? TP was actually smashed. So since TP was smashed, you can see we have a break of structure, we have liquidity that has to be taken out, and we have the imbalance right here. So what happened? The market came, tapped into our demand zone, it entered into our demand zone, and then pushed all the way to our target. So right now, okay, here we have a new break of structure. So I'm just going to go ahead and adjust this to this and then delete this. Okay, do we have a new fair value gap? I'm just going to go ahead and delete those Schengenians on the chart. So do we have a new fair value gap? I think we do. We have a new fair value gap here, but it's very, very small. Okay, so we have we have this imbalance here for the market to actually come and fill it. Okay, so the reason why we are marking this demand zone is because this is the low that took out this high. Okay, so that's why it's really, really important. It makes it a demand zone. This is the low that took out that high and pushed the market to the upside. So why? And then this becomes our liquidity. Okay, this becomes our liquidity pool. All right, so what happens? The market has to take out that liquidity, and then you see it tapped into our demand zone. We could go to the smaller time frame and actually redefine this. So we have that candle right there. So we could always go to the smaller time frame and actually redefine these. Okay, so we have a fair value gap, and this is the whole of this is liquidity. Okay, so the whole of this is what liquidity, and what does the market do? It always will take out liquidity. For the market to push to the upside, what must happen? Liquidity must be taken out. So what happens? The market tapped into our demand zone, and then your stop loss just a few pips below. Okay, you don't want to gamble. So what happens? You always target the high. Okay, so you see. So you see, it just continues in that manner, fam. It just continues in that manner. So we have another break of structure here. Here becomes our new demand zone. So right here we can also focus on the current market structure. Okay, can also focus on the current market structure, like the FAS right here, which we're looking at. So we have a break of structure. So where is going to be our new demand zone? It's going to be here. So I'm just going to go ahead and just mark it out for you guys to see. We have our new break of structure, which is right here. All right, I don't want this video to be too long. Okay, we have a new break of structure, which is right here. And what happens? You see that here becomes our demand zone, and all this is liquidity. But if you go down to the smaller time frame, which we'll do in just a sec, let's go to the smaller time frame. Since the market is creating highs and highs and not actually coming back, so you could just go to the smaller time frame, like probably the 1 hour. Yeah, so you can see here that there's a break of structure. The market will turn back to this demand zone. Okay, and also it's kind of funny that you can actually literally trade any time frame at all and you still make money. Yeah, okay, so you have to identify the higher time frame structure, okay, and then you mark it out. So you still do the same thing on the lower time frame, and then you still make money. So right here we have what? A break of structure. Okay, mind you, you can still focus on the higher time frame structure, so as your target. All right, so because there's a break of structure here, and then there's a demand zone here, there was liquidity right here. Okay, so if I'm trading this, I'm trading with respect to what the higher time frame is showing me. So there's a break of structure, there's a demand zone here. So what I want from here is actually to just identify the same thing, okay, from the 1 hour time frame. we have the break of structure, which is this right here. Okay, and then we're just gonna go ahead and mark our break of structure out, our viewers. Okay, we have our break of structure. So since we have our break of structure to be this, and also we have our liquidity area to be this, so what happens, we are going to mark our demand zone. So we can go to the smaller time frame and just try to adjust a few parameters like the 30 minutes. Okay, so I don't want to waste your time too much. I think this video is actually taking too much time than I thought. Okay, so yeah, so on the 30 minutes time frame now, you just want to identify the whole thing. Okay, let's go to the 15 minutes. All right, let's see. All right, let's see. Okay, the goal of scaling down to the smaller time frame is to actually be able to mark out those structures very well. Okay, so here we have our demand zone, right? So we have our demand zone right here. Okay, we have our demand zone right there. So since there is our demand zone and we have our break of structure, which is right there, and then here is our structural liquidity. All right, since that's a structural liquidity, we wait for the market to actually tap into our demand zone. All right, we can also mark our fair value gap even on the 15 minutes or the 30 minutes. So right here, we can actually see a fair value gap. Okay, so right here, you can see a fair value gap. So in another of my video, we're talking about fair value gap. So you see stop loss just slightly below. You could target the high, the previous high there, because that's the whole thing of this strategy. Okay, so you see, very simple. Anybody can just implement this. If you want safety, you could just go with this target right there. So you could just go, even at that, you still make good money. All right, so now let's look at something that was actually very interesting here, which I saw today. I think, yeah, today, yeah. My show, yeah. So so I want you guys to actually look at this from 30 minutes. So this actually works, right, on any given time frame at all. Okay, so let me see. I think I'll be able to see this clearly on the 5 minutes. So I'm not saying you should use the 5 minutes, okay, but just trying to make a point here. So right here we have a break of structure, right? Okay, we have a break of structure, which is right here, right? We have the break of structure, BOS. All right, so we have a break of structure. All right, we have a break of structure, and then we have our liquidity area, which is right there. Okay, so I'm just gonna go back to, let me just try the 10 minutes to see if I'll be able to see any significant demand. Yeah, significant demand zone. So looking at this becomes my demand zone, and then there are some fair value gaps right there, signifying imbalance in the market. So I can just mark it out, that and this here. So this is a fair value gap, it has to be filled. So what happens, right? So you could clearly see how the market taps into this, gave us a confirmation that if you want to use confirmation, you could still like apply confirmation candles too. So you see, very simple. Anybody can actually implement the strategy. And fam, don't forget to hit the like button, subscribe to this YouTube channel for more and more wonderful videos like this. So we could try another one again, but I think I'll stop here. So don't forget to hit the like button and share this video to as many persons as possible. All right, so have a blessed day.